I've been really thinking about this for a long time. It's very interesting in terms of what it means for the economy, et cetera. A lot of our tech listeners, forgive me please, my technical knowledge is not at the level that probably yours is, but I'm gonna try my best. There's been a lot of concern in the markets right now around Nvidia after this major event happened. Let's put this up there on the screen from the Wall Street Journal. It recently ascended to become the world's most valuable company, going over Microsoft in terms of its market capitalization, reminding a lot of people of what happened not that long ago during the .com bust. As they reference, Cisco Systems in March of 2000 was the last time a major big provider of computing infrastructure surpassed Microsoft, and in retrospect, actually was a major indicator of some of the falling values to come. Now, I want to say, to be fair, the CEO of Cisco at that time, while he said that there are some parallels, said, quote, that the dynamics of AI are different than the previous ones, such as internet and cloud computing. And he has said that he himself is majorly invested in AI and in cybersecurity. So he doesn't think it's necessarily a one-to-one situation. But part of the reason why it's kind of scary is that the exponential jumps in Nvidia are powering huge portions of everybody's retirement that they may not even really be aware of. And it's not just them. It's that the market forces that are driving Nvidia above Microsoft are the same ones that are powering, let's say, Google or Meta or any of these other technology companies who are betting the farm on AI. They're investing massive hundreds of billions of dollars into this. And so if there's any crack in the system, it's not just going to come from Nvidia. It's going to shave, huge amounts of value off all of these technology companies. And when you add those up, I mean, 7 out of the $8 trillion companies in the world are US-based technology companies. The only other one is Saudi Aramco. So that means that if you saw any drop in Nvidia, it's not just that Nvidia is so dramatically represented in the S&P 500. So let's say you're a normal investor, your VOO is like a meme online, which is like the Vanguard S&P 500 ETF. You're like, I have broad exposure. It's like, well, actually today you don't, not nearly as much as you think. Let's put this up there on the screen just to give people an example. I mean, you can see there clearly how far Nvidia is powering the S&P 500 above where things are. And so where we say like, oh, the S&P 500 is up, what, 25% or whatever over the last year or so. Well, when we look at it though, a huge portion of that is driven by those exponential Nvidia gains. So it's not just that a single stock is so behind the rally in so many public markets, it's that if there were to ever be a crack in Nvidia, it would mean that there is a crack in the whole technology ecosystem, which is almost like a quarter of US GDP at this point. And any significant plunge, we're talking about capital problems, liquidity problems, people's retirements get wiped out. I mean, it's a disaster, as we all found out in 2008. So this is something that a lot of people that I know that are skeptical are starting to get worried about what happens here should anything happen with this single company.
Yeah, and it seems to me like the question isn't whether AI will ultimately be a transformative technology and whether these chips are going to continue to be central to a lot of new tech development. But I mean, that's the thing like with the .com bubble. It's not that the internet wasn't transformational.
Correct.
It's that you had a lot of, dumb company ideas, a lot of froth in the early days, and a lot of money just being thrown at absolutely anything, whether it had a real market, whether it had a real path to, earning revenue and becoming profitable or not. And, you see this with a lot of new industries when they're first developing. Some things will succeed and many other things will not make it and crash, even though they were in the right place sort of at the right time. There were a lot of early personal computing brands that are no longer around, even as the PC obviously became really transformational technology. So, what do I know? I'm a layperson. I'm just looking at this from the outside. But having lived through the, 2000 and that crash, it does seem like it could rhyme. Like we could be seeing a very similar dynamic where there's so much hype around AI. There's so much money being thrown at it. There's so much projection of what it will mean in the future that obviously NVIDIA's price right now, doesn't reflect where they are right now today. It's all based on people's projections of what it could be in the future.
Yes.
So if anything rocks that, if if it doesn't come to fruition to be as transformational, or if a lot of these companies, startup companies and other larger players that are incorporating this and betting on this for their future success, if it doesn't work out in the first iteration, there could be massive exposure here. So I definitely think it's an important thing to keep an eye on.
I'm worried about it. I mean, for example, the quarterly revenue of Apple, which is, I think, the second most valuable company, is like 90 billion. It's like Nvidia is doing like 26 billion. Like, well, okay. So, but again, market people, I get it. It's about future value, not current value. But we're talking about Apple, a global brand with its own, proven infrastructure, has a lot more resilience. This is not the similar situation. I mean, I was looking at some of the worries about Nvidia. The very first thing that the new TSMC CEO, the person who actually makes all the chips in Taiwan, he's like, yeah, I think Jensen and I are going to need to talk about prices, for his chips.
Yeah.
Well, this single company is making all the chips. You're basically have the world's most valuable company. You're their sole supplier. What do you think you're going to do? It doesn't take an economics genius to figure it out. At the same time, I mean, we are a single one. Imagine this. China doesn't even invade Taiwan. They do what North Korea does, and they just launch a missile over Taiwan that crashes over. You are going to see half the S&P 500 go to zero. I mean, the existential systemic risk that you see there is outrageous. I mean, and the back of the U.S. economy is built on this. So we are really subject to a massive shock. And geopolitics, what, you think Ukraine was important? Yeah, I get it. It spiked the price of gas and screwed up some wheat markets. That is nothing compared to the risk that is sitting on the Taiwan island. And when we consider, the geopolitical risk, but really a lot of the exposure that people have here, people are very worried about froth. They're worried about like misprice. And it's like you just said, no one is saying that this company is not extraordinarily valuable and it is not a trendsetter, but it is also one where it could be just overpriced from where it was, just like Amazon.com was in the middle of the dot-com bubble. And ask any of your parents who lived through the dot-com crash. It took a while for people to come out of that. There were a lot of lessons learned. We're already seeing like some signs of a lot of these AI startups just going bust.
There's going to be a lot of pets.com.
Yeah, and we're already watching it. There was this famous Marquise Brownlee helped kill this company. It was called Humane AI. It was like a pin that you wear that you try and speak to, and it was a terrible idea, honestly. But I mean, they raised like $250 million. He actually uses it, doesn't end up doing well at all. Now I think they're a fire sale or whatever on the company. There's a lot of these wearable AI techs. Just from an observational, I know a lot of these people who work in tech. 2 years ago, they were all Web3, crypto guys. Now they're AI guys. They're like using AI to power X, Y, and Z. And the other funny thing is you watch how ChatGPT, for example, in its translation, whenever it rolled out real-time translation, that wiped out like 7 different companies who had raised hundreds of millions of dollars being like, we're going to use AI to real-time translate. And ChatGPT is like, yeah, but we could just do that ourselves.
That now.
Yeah, exactly. And we're watching too here, like Microsoft, a huge portion of their rally is through their enterprise collaboration with OpenAI, with ChatGPT. So you can just see how there's a lot of there's only a couple dominoes that need to fall here, and a lot of stuff is going to get wiped off. Now Microsoft's not going to go bankrupt. I'm not saying that, but you shaved 10% or whatever off the value. That's a $2 trillion company.
Yeah. Well, I mean, you've got definitely the pets.com phenomenon.
Yeah, I'm worried about
we already see that. I mean, the numbers in that first article we put up, they say that the insatiable flow of money into AI has raised eyebrows among investors. Uncertain the boom can continue without pause. Some $50 billion has been invested in Nvidia's chips since the boom began, according to a Sequoia Capital estimate in March. But generative AI startups have only brought in $3 billion in sales. So $50 billion invested, but only $3 billion in sales returned. No one should have any confidence also that the VCs that are, primarily responsible for distributing a lot of this money have any more sophisticated understanding of what's going to work than basically like you or I do. We've seen the way that they have been fleeced. If you come in with the right pitch and the right set of investors and the right board and people who seem like they're prestigious and know what they're doing, they can easily be fleeced on this stuff too. So that's no check against this sort of froth. And then the other thing I would say is even the established players, it's not like some of the products they've put out have really gone over that well. What is it? The Google
Gemini.
AI generated results have been dramatically wrong and embarrassing. What was the image thing that we covered
where they're like, show me a Nazi soldier, it's literally a black guy.
And
like, what?
They went too far in the direction of being woke, and they just like made it wrong. Like just totally historically inaccurate in their attempt not to have white people on the screen at any particular time. So it's not like even the established players have really lived up to the hype at this point. So a lot of question marks there.
Yeah, I'm very worried because it, even a 25% drop, 10% drop, which is, you should always, if you're buying and playing around in single stocks, you need to be prepared for that. And if that happens, huge portion of the S&P 500 goes down. Now we're asking all of these questions. I mean, if you go back and you study the .com era, it took, I think, like 7 years really to yield some of the investment results that eventually went down into the fact that .com enabled people to lay broadband and fiber optic, some of that stuff, and eventually it yielded results in 2008 and forward. But I mean, it took a long time for some of that stuff to materialize. And I always think about the 65-year-old of today, because it's easy to think about, oh, well, in the long run, everything will be okay. But if you have to wait 7 years and you're 65, that's a long time for you to wait for your retirement savings to come back. At the same time, we do have a counter indicator that Nvidia is not going anywhere and it's doing just fine. Let's put this up there on the screen. Nancy Pelosi, presumably her husband, maybe her, has now made over $5 million off of some Nvidia options, up 230% in 210 days. Still not sold her call options. She has made over 20 times her salary. Portfolio at an all-time high of 100%, according to our friend Unusual Whale. So when she actually sells, then perhaps we may be in a problem. But, but here's the other problem. You won't find out in terms of reporting until like 30 days or whatever after we sell. So we don't have a real-time indicator of whether she's getting out or not. But I don't know.
She could be selling today. We don't know.
Exactly. Me personally, I'm just saying I'm worried about it because of, first of all, a lot of friends who work in technology. But second, and really the most importantly, is just anybody out there who's got retirement savings and more, you have a lot more exposure to this stuff than you may even realize. And something could just happen and boom, we're in a totally different economy.
Yeah, and that has ripple effects for everyone, whether you're in the stock market or not.
Hey, if you like that video, hit the like button or leave a comment below. It really helps get the show to more people.
And if you'd like to get the full show ad-free and in your inbox every morning, you can sign up at breakingpoints.com.
That's right. Get the full show, help support the future of independent media at breakingpoints.com.